Welcome to Pressure Points. Our topic is what are the highest level takeaways about the state of the AI trade from the reports of Google, Microsoft, and Meta? And that takeaway gets a little bit complicated because we have Google shares up 6% in the after hours. We have Meta down 4%, Meta down 7%, and Microsoft down 4%. And so it seems that there is tale of two cities going on here. And so let's pause on the stocks being up and down and focus on the biggest takeaways. And first and foremost, the AI trade is intact. And the reason is that these companies are continuing talking about spending and investing much more than what we thought 3, 6 months ago, 2 weeks ago. You pick the time frame, the amount that they're investing is increasing. Now, investors' view on how to calibrate that and how to value that with these three companies is different for each company. But the big picture around the broader AI trade is there going to be continued investment? I always think of the hardware piece, the CapEx piece is the brain of AI. And the bigger the brain gets, the smarter AI gets, the more utility, the more people use, the bigger the brain. That whole virtuous flywheel that Jensen talks about is in play. And so all three of these companies talked about more CapEx, and some of the specifics are Google raised their CapEx basically by 7% for this year. Figured that's probably what it goes up next year, so they'll grow at 20 some percent. Microsoft went in with the fiscal 26. It's a June end. The street was looking for 42% CapEx growth. They didn't give a specific number, but talked about it being up substantially. So that's probably going to be up 50, 60, 50%. If you look at Meta for calendar 26, they didn't give specific numbers on CapEx, but the street was looking for 40% growth. This is a December year end. The street was looking for 40% growth, but based on also commentary about being aggressive and substantial, it's probably going to be up like 60%, maybe even 70%. And so that is good news for NVIDIA. It's good news for the broader AI trade. All of these companies that benefit from that spend are going to continue to see robust growth next year. So that's one of the big takeaways. Second takeaway is related to cloud. And this, of course, also is representative of the broader AI trade. And the cloud growth rates were better for both Microsoft and Google. Google was a little bit bigger upside surprise versus Microsoft. Microsoft had cloud and constant currency growing at a similar rate, 39% in September. That's the same rate that it grew at in June. Well, Google saw an acceleration to just over 33% growth from 31.5% in the June quarter. And so as cloud goes, that's good news. And also they said that they are supply constrained. That has been a common message from Amazon and Google and Microsoft over the past year. The numbers, in other words, would have been higher if not for being capacity constrained. And so you can get into the nuance of what the whisper number was, what the imprint number was relative to guidance and on these. It's not. I think this is not the segment to do that. I think the most important part is that cloud exceeded, continues to be capacity constrained. Google said that they're going to be capacity constrained in cloud through the end of next year. Microsoft said through fiscal 26, which would be through June. And so I think that the last piece in terms of the health of the AI trade is that there is a psychological piece to seeing the bellwethers trade off measurably, meaningfully on what has generally been good news. And I think that may cause for a pause in some of the enthusiasm through maybe this earnings. Maybe we are due for that, and this is just kind of a healthy pause and a little bit of a recalibration. But that recalibration is focused on a target that is higher than it was 3 months ago. And I think that more broadly, the impact of AI, my optimism about it is unchanged at a very high level post at least these three companies report. So on behalf of Pressure Points, I'm Gene. Bye for now.